with either numismatic graded mint state coins or bullion coins like the American Eagle, and silver coins like the Silver Eagle or 90% bag. I prefer the bags, actually, because you can spend them if you have to, easily. In what quantities of order of priority? Quantities, I think people should have 80% or more of their assets in gold and silver. That's my personal opinion. Because we're coming to a time here when everything's going to fly. And of all these asset options, which is the gold asset class option you forecast that can make the greatest margin of profit? And I'm sorry to say, it's the stocks. The stocks will make more money, but there's more risk. Buying stocks is gambling. Even though a company's taking gold out of the ground and they're making money. I was a stockbroker for 28 years. Buying stocks is gambling. Very simple. But anyway, that's where the real money is made. The second will be in numismatic coins. Those are the two places to go for the greatest appreciation. If you want to diversify out of gold somewhat, what would you recommend and why? The only thing I'm recommending is Swiss franc government bonds for people who have too much money and don't know what to do with it. What are your thoughts on owning plain gold stamp bars? It's okay. It's just then, if we have a bartering environment, it's going to be very difficult, not impossible, but very difficult to trade bars because they're usually worth a lot more than a coin. And so I tend to want to have coins because coins, people know what they are. They know what a sovereign is and an eagle is and so on. The Krugerrand's been around a long time. Everybody knows what that is. Are there any real safe havens to hold accounts or gold offshore, especially if we risk the possibility of confiscation? And if so, where? Well, as far as I know, the U.S. government is demanding all foreign governments that they open up a new account. The person, if they're an American citizen, has to fill out a W-9. And that's a fact. So, if you have an account out there, maybe you're safe. If you don't have an account out there, you'll have to fill out the paperwork, and they'll know what you're doing. And they'll know where your gold is. And if they still have the military that they have, they might say, well, if you don't tell us, Bahamas, we're going to nuke you. So who knows? What are your thoughts about Jimmy Rogers' recommendation in investing in China, commodities in China, long term? Don't agree. China's got a host of problems, and I just disagree. I don't want to go into any great detail on it. Immigration, many corporate executives across the industry are leaving and moving and transferring to jobs in Australia, New Zealand, Canada, Singapore, and other countries. Why these specific countries? English speaking, number one. Australia is probably the best of the group, destination-wise. But again, there's no panacea. They got the same problems that America has, but they have a common language, common ethnic background. Canada's a nightmare. I mean, the letters we get from Canada, you wouldn't believe. And it's very expensive. Canada's about one-third more expensive than the moderately priced cities in the United States. And that's a lot of money. I mean, you go buy an item, instead of costing $1, it costs $1.35. That's a big difference. And it's been that way for a long time. 25 years that I know of. It's just a more expensive place to live. As it has been explained to me, if Mr. Obama officially devalues our currency, say by 50%, all of our asset prices will increase in nominal value. Well, that's incorrect. All of your assets will go down 50% in nominal value, not up. the debt won't stay the same, because if the dollar is only half of what it was before, and you owe $1,000 a month in your house payment, you can't pay it. Here's the money in your pocket, it's only worth $500. So they're going to have to adjust everything. If they don't, well, nobody can pay anything. And it goes on along that. Therefore, those able to liquidate assets after the devaluation occurs can pay off debt quickly. That's not true. Would the same principle hold true to foreign assets? Yes, that's not true. Can you just help completely dumb down this whole devaluation concept for all of us listening today, as well as explain the pros and cons to such a policy debased currency? Currencies are debased against other currencies, and currencies are debased against gold. And if you saw the charts that I've got on the debasement over the last 5 years, you'd be very surprised. The currency that's done the best is the Swiss franc, and so it's the best of a bad lot. Devaluation is because the value of the dollar for investment is not what the dollar is selling for. And so that's why you have devaluations, because it's not buying what it should. And I think that the alumnus want, at a time in the future, and it's not too far away, within the next 2 or 3 years, they want to devalue all the currencies simultaneously. And that means gold will go crazy. So this gold thing is not going to last 2 days or 3 months or 2 years. It's going to go on for a long time. If you've got gold, you're going to be rich. Now, I know that's not your intention. You just want to stay out of harm's way and keep what you've got. But unfortunately, you're going to get wealthy, and whether you like it or not. But you can always give the money away. Convert the gold into something that's fungible so you can give it to poor people. Whatever you want to do. But there'll be plenty of ways to spend it. If the dollar devalues and we have hyperinflation, which we will have, that's me, will the U.S. dollar be reissued with larger denominations? No, I do not think so. They'll do a 5-for-1 or a 10-for-1, and they'll come up with a new dollar, and it'll look somewhat like the old one, and they'll say, you got 30 days to turn the old ones in. And if you get them stuffed in the mattress and you leave a few in there, you're stuck. And that's what they're going to do. They're not going to come up with bills to prolong the agony, because they know this is all planned. They're not a Zimbabwe. They're not that dumb. The question is, if the U.S. dollar has been theoretically backed by oil for the past 35 years, what do you forecast the new debt backing to be? Will either be one of two things, gold or nothing. And if they continue with a fiat new currency, it won't work. If they do it with gold, it will work. How much do they have to put down? 15, 20, 25%? I know that when the euro was done, it was done at 15. It's now about 7% backing. But the Germans and the French both wanted it 25. So that's interesting. As a follow-up to my question, will other countries use oil to back their currency? No, I don't think so. Melody.
Yes.
Are you there?
Yes, I am.
If the dollar devalues and we have food shortages, what will people use as units of exchange? 90% silver coin?
That might be one, but also you will be selling your gold coins and getting the current rate of exchange. You'll be using that to be purchasing items. There will be some local bartering going on, but your 90% you can always still spend, and so that's that.
Okay. Melody, do you agree with Lizzie Williams that the price of oil will remain very low through 2009. It will increase in price in 2010.
That question was to me, an oil price?
I guess that's what it says.
That's what it says. Oil? I don't know. I would assume that it would have to go up a little bit with inflation. I mean, the dollars are going to be going down, so you'd think you'd have a little bit of an increase. But, I mean, I'm not so sure if anybody really knows. I think it needs to be higher. I think gasoline prices will go higher. But I don't think it's